Hi there, Addy here with buildingsforsaletoronto.com, here with another new property that we have coming in the market. It's an 8-unit building located in Burlington, Ontario, at the corner of Brant and Gant. It's a great property. It's got a low cap rate because there's some tenants that have been there for a little while, and if you know about rent control in Ontario, as the tenants move out, you have the ability to take the property to full rent, or that particular unit to full rent. So that's the opportunity with this one. We're going to dive into the numbers a little bit. If you want more information, you can reach out to me. Don't forget to subscribe. At the end of the video, you have 3 options. 1, you tell me, you know what, I'm interested in purchasing this property and I have the cash available. We can help you take care of that. 2, you say that, you know what, I'm interested in purchasing the property, but I don't want to manage it. In that case, we can help you purchase it and help you create a program in which we will manage the property for you and provide you with reporting at the end of each month. Or 3rd is you are interested in purchasing the property but don't have enough money, but do have some money, in which case we can connect you with some of other like-minded investors that we have in our database and see if we can find an opportunity for you to invest alongside them and purchase a property like this for yourself. So let's get into the numbers. Again, if you have any questions, don't forget you can send a text exclusive at 647-370-9470 to get all the information about this one and connect directly with me through there as well. So the asking price on this one, as I said, 8 units in Burlington, Ontario. Asking price is $2.85 million, which is $356,250 per unit. Some might say that number is a little bit high, but you have to keep in mind that Burlington and Oakville are one of the few cities in the GTA area that have the lowest number of rental units. So the demand for rental is much higher in these areas. Oakville is catching up because they have a lot of new condos that are being developed. Burlington's still far behind. There are condos being developed, but they are still one of the lowest numbers per capita for rental properties. So price per unit is high, which also means that your rent prices are really, really high as well, because everybody's buying, and those tenants that are looking for spaces to be in these areas, they're willing to pay more rent for it. So at 55% loan to value, 45% loan, 55% loan to value, 45% down payment, your mortgage of 1.567 at a 4.3 cap rate works out, 4.3% interest rate works out to a monthly amount of $77.57. That's a 30-year AM with a 5-year term. On the expense side, you got management fee, which is $46.65. Personnel, so this is somebody that is going to be there, living there, taking care of it. This might not be a pay that you're giving them. This might be a reduction of their rent that you're giving them on a yearly basis. General admin $800, marketing $400, repairs and maintenance $6,800 per year. Again, all of these numbers are based on CMHC averages for these type of properties and on what they would use when they're evaluating and putting a price on a property for mortgage purposes. Contract services, which includes your garbage removal, your snow removal, utilities. This is provided by the vendor, which is $96.32. You have property taxes of $17,050, insurance of $3,600, which is $450 per unit, and a grand total of $49,147. Market rent for a bachelor in Burlington right now, $1,200 is on the low side. Average right now is $987. This is what they're charging right now, $987.48. There's 7 2-bedrooms, 1 washrooms. They're averaging right now of $1,214.39. Market is, again, on the low side, $2,200 for this type of property. 10 parking spots, $2,400 a year, $2,400 a month. And then you have your laundry income of, this is per year. Laundry income of $1,440 per year. So monthly total, $13,328 currently. Projected would be $20,440. Total annual works out to $232,000 versus $117,000. So quite a bit of difference, as you can see. So vacancy of 1.5%. Now you might be wondering why this one is 235, while the vacancy should be reducing this amount. The numbers that we're looking at, we basically run the numbers so that the value today is based on the income that it's going to generate over the next coming year. So this $235,000 is from our projections that we have done, in which it's actually taking into consideration the increases for the year and then subtracting out the vacancy rate. So $235,000 will be the effective gross income. Projected, the $121,000 is the projected gross income for the next 12 months. Less operating expenses, which are basically taken from here. Your net income, $72,000 versus $186,000. Your mortgage payment, which is $93,000, which we calculated up above. you have a cash flow coming in of negative $20,608, or if the property was at full market rent, you'd be at positive $93,000. Your principal recapture, which is around $26,000, so you are making money after you put in the principal recapture. Without the principal recapture, this property is negatively cash flowing. The trick with this property is to find people that are looking to move. There are legal options available to you. If you are interested in having some tenants move out, consult with with your local legal representative and have a conversation with them on how you can move tenants out. Again, these are all legal ways that you can chat with tenants and see if they would be interested in moving out. There might be some compensation involved, and that's something that you would have to decide with them. So expense versus income ratio right now is running at 40%, which is really, really high. Should be for a property this size, should be somewhere closer to 20 to 25%, but 40% is high, and that's a symptom of the rents being so low. Cap rate is at 2.54. At market, it's at 6.55. Cash return on first year is negative 1.61 versus 7.3. Your ROI over the course would be as high as 9.34% if this was at market. Land transfer tax will run you about $62,000, $5,000 for lawyer fees, $2,500 for building inspection, and then an environmental would be required for a property like this, which would be $4,500. Total closing costs work out to $74,200, with the grand total cash needed is around $1.356 million. Now, you might be questioning, why would somebody invest in a negative cash flowing property? The reason is because there is so much potential that is within the property. If you were to purchase it and do the renovations and get turnover, this property will definitely be cash flowing, and your ROI would be much, much higher. As you can see, the projected cap rate for at market rent, which are, again, rents are lower, $2,200 are on the low end, is at over 6.5% cap rate. So if you want more information about this, and you want to set up an appointment to chat about this, feel free to send us a text at type exclusive to 647-370-9470, and I'd love to connect with you. Again, 3 options: buy it yourself, help us manage it for you, or let us help you connect with other like-minded professionals that are looking to buy the same thing. Take care, and we will chat with you soon. Cheers.